Hi, this is Mike Maloney with a Precious Metals Update, and I'm recording this on Sunday, June 26th. And boy, did gold make a big move up after the Brexit vote last week, where Great Britain voted to leave the European Union. And just the day before, I had released a video showing that I think that gold is probably going to go down. And I release it, and the very next day, it makes this huge move up. In that video, however, I said that it might go up, it might go down. I do not trade because someday, this was basically proving my point, someday technical analysts will believe that gold is going down and people that follow them will sell their positions or go short, and gold will go up and it won't stop running. It's going to keep on going. The day that the currency crisis comes is the day that gold really explodes. And that day is getting nearer and nearer. You can't do the things that they have done to the global economy and not expect gold to rise and account for the massive creation of fiat currencies around the world. This will happen. So it's my policy to just accumulate and accumulate, and I never trade in and out. If I was a trader, I probably, based on all of the technical evidence, I probably would be out of the market right now, and I would have missed this big move. Do I think that it's going to continue? Actually, I think things are going to stabilize. In the video that I made, I showed the 200-day moving average rising over the next month or so to the $1,200 area, where it's been before. There's a support zone, round number support, and then the trend line from this line to this line comes close to that 1200 area. And so I call it a triple magnet, wanting to go back to a trend line, round number support, and the 200-day moving average. I still think that that is probably something that may play out. This is an overreaction to all of the fear-mongering that the press did surrounding the Brexit vote, and I think that it's going to be stabilizing. It just shows you how insane this world is sometimes. And if you watch my other video about the Brexit vote and how the markets are in turmoil, the thing is, this can't happen under a gold standard. The British pound took this enormous hit, and the euro changed, and all the world currencies. Now, the stock markets could have made a big reaction. There could have been a crash there, but you wouldn't see these wild currency gyrations that we're seeing because of basically the press and the fear-mongering of Great Britain leaving the euro. Now, silver had a move too, not nearly as large a percentage move. We've got 4.75% for gold and only 2.5% for silver. So silver really not confirming this. That suggests to me people move into gold right away as a safe haven. Now, silver went up because gold moved, but people weren't going into silver as a safe haven. So this is a fear-based trade. The fear is temporary and will alleviate over a little bit of time here. But what has happened with the futures, the commitment of traders, the COT, as I pointed out in that previous video, is just about every time this explodes to where the commercials, the blue side of this, when they've expanded their position and it peaks, then when they reduce the position, they capture all of this fall. They're going short, so they're making a profit on gold going down. And every time their position explodes to a maximum, gold goes down. Now, it had exploded to an extreme, and gold did go down a little bit, and they covered some of their position. But now they've gone to the greatest position in the last year here. This is the largest that it's ever been. Silver is basically the same story. It's up at the levels that it was earlier back in April, but it's the same thing. Every time their position explodes to an extreme, and then the price falls, and then they cover. So the probability of gold and silver temporarily going down, I believe is high. Do I think that means that we shouldn't be buying? Well, I'm buying right now because we are just in a very globally a dangerous political situation, a dangerous economic situation. And these little wiggles, when you look at the big picture, really don't matter. Look at a 20-year chart of gold and silver, and you'll see that these are just tiny, tiny gyrations. And the main thing is to accumulate a position of safety, something that will profit off of the recklessness of the world's central banks that will go up in a crisis. And that is basically gold and silver. So I just always try to expand my position in gold and silver. I don't trade based on these technicals, and I do think that we might be in for a very short-term pullback. If we go in for a big pullback, that's going to be because the deflation that I've been predicting is hitting us, and the physical won't be pulling back as much as the futures contracts and GLD and SLV. The spot price will fall, but obtaining things like 1 ounce and 10 ounce coins and bars becomes much more difficult during a crisis, and the price on those can actually rise while the spot price is falling. And so that's the reason that I just always accumulate. Thank you very much for listening. Please like and share this video, and we'll see you next time.